You saw this big run up, and then we had this bear market in Bitcoin where it just collapsed. So that's really what I'm trying to figure out here.
You mentioned the big news, Bitcoin making an all-time high. Your perspective on that? I know in the past you were looking for lower prices in Bitcoin. Is that still your view that we could see a further pullback?
Yeah, so the price action on Bitcoin has fascinated me over the last 3 weeks, especially just last week where we made that new all-time high. Now, you have to look at it in a perspective of, so my long-term views are Bitcoin's going to 100,000 to 500,000. I mean, it is going to be a major asset for the world in the next 10 years or so. But the question is, what's going on here? And last week, we saw the launching of the Bitcoin futures-backed ETF. And if you look to when the futures launched on Bitcoin a few years ago, there was a similar run-up into that launch, just like we saw into this ETF launch. And part of it's the hype, right? Part of it is people just clamoring. But the other question is do you see some underlying institutional pressure to push it up to get these long players long, these smaller investors on the longer side, only to dump it out after? Because in 2017, when they launched the futures, that's exactly what happened. You saw this big run up, and then we had this bear market in Bitcoin where it just collapsed. So that's really what I'm trying to figure out here. I do want to show this on the charts because it's fascinating. You pierced the all-time high on Bitcoin one day. Just one day. Now, there's something I use which is called the confirmation signal. The confirmation signal basically comes down to needing 2 consecutive higher closes on any asset to confirm. Now, the reason why you want that is because there's games that institutions play. All right, did they just run this up to keep the hype into the launch of the ETF? Now, remember, if you're launching a product, you don't want the underlying asset to dump out into the launch. You want it to be successful. So there's an incentive for the people that are launching this ETF to pump it into the launch. And then once it's launched and had a week or two of upside, you can kind of let it go down and, okay, it was still a great launch of the ETF. So that's the question. We didn't confirm above this top. We only got one close before you got a reversal candle here. So it kind of creates a situation where you might actually have a double top here, and that could be a little bit bearish. Now, if we go up again in the next few days and confirm above it, well, then I think you have upside to 70,000, maybe 75,000 in the near term. But without confirmation, I have to be a skeptic here, knowing the volume in Bitcoin has been light, knowing the institutional pressure into the ETF launch, and just knowing the overall sentiment. The sentiment right now is unbelievably bullish in Bitcoin, and that concerns me as an investor, where people are saying, oh, it's going to 100,000 by year end and then 500,000 next year. I mean, these calls are getting a little too outdone, and usually that's sign of irrational exuberance. So for me, I'm just going to try to focus purely on the chart and let the chart tell me, does it confirm above or does it not? Now, in all fairness, I am short Bitcoin right now. I utilized that pierce to short it, so I'm short at 6,600 and 66,100. I'm in the money right now, a little over $3,000 to the downside, but I still think there's a potential for more downside, and therefore I am holding my short on Bitcoin, at least in the near term.
No, essentially what you're saying, though, is that you're really looking for that second confirmation of the new high before you'd become bullish again.
Yeah, so that's exactly. You want to close above that line again, and then you need another day where it closes above the high of that first day. And the reason why I look for that is because there's a tendency for manipulation to occur. And this occurs in stocks, commodities, so many different things where the institutions, they know they can trigger max greed by closing something above a level where the max amount of people will jump in thinking it's a breakout. I mean, how many times have we seen charts do that and then they reverse and everyone's left holding the bag saying, but I thought it broke out. And instead it reverses and they take losses. So that second close above historically has told us that it's not a game by the institutions, that there's some legitimacy behind it. In other words, it's not a fake out breakout.
No, we've seen a similar thing happening with the stock market recently. It looked like the stock market was going to roll over, but now we're making all-time highs again. Your take on where we stand right now?
So that's exactly right. So I'm looking at that same kind of thing on the S&P chart here. The SPY, for instance, is just peaking above the previous high on the SPY chart. And let me zoom in on my chart here. And what you can see is we're going to look for that same signal. And this signal is beautiful because it's universal. It can be used for breakdowns. It can be used for breakouts. So notice this trend line here, how it slopes, and we kissed it right here. And now you're hitting it again, plus the double top, and we are above. Do we confirm tomorrow in the S&P? That would be interesting to me. That would show me that there's more potential legs to the upside in the S&P. Right now, I'm kind of in a wait-and-see attitude. We have lower lows, but now we have a higher high. So I think the last time I was on, we had finally made a lower low and a lower high, which had, to me, changed the trajectory of the market to a more bearish tone. We now have still lower lows, but we have a higher high. So you take the positive and the negative, and they cancel each other out. So as a trader, I have to be more in a neutral stance until I get more information in the near term. Now, one thing to note here is that the NASDAQ 100 still has not come back to those recent highs. And you could look at this and say, okay, well, how does this make sense? And it makes sense if you think about what stocks are inside of the S&P and the Dow, which are making new highs, versus the NASDAQ. So the NASDAQ is tech-heavy stocks. You know, we know that Snapchat warned. We've seen yields moving up, which is usually negative for technology stocks, but it's positive for dividend-paying stocks that make up a large part of the S&P as well as the Dow. So it seems like there's this money rotation going on where people are moving a little bit away from technology, positioning themselves for higher interest rates in the future.